Hey, good morning. Welcome to the morning brief. Today is Tuesday, August 6th. So we've had a crazy couple of days. Uh, and we'll talk about that here in just a second. What do we got on News Tap today? Well, at 8:30, we had trade balance from the U.S. Was less than expected, or worse than expected, I should say, but nobody cares about trade balance. So there's really nothing else the rest of the day. So virtually no news day, which we need because we need the market to take a breath here and see what's going on. So 3 days down, so we know that the market loves sequences of threes. You can see I've got this expanded so you can see the volume. Very high volume on an ugly, ugly day. That is not good. That says we have volume behind the price movement. So that is kind of confirming this bearish attitude, this bearish move. That being said, we're going to gap up very, very slightly, but if the market likes threes, this could be a bounce day. We'll have to wait and see. We were able to stay a close above the 200-day moving average, which is bullish. I guess if you could try to find something positive about this market, that would be bullish. We didn't close below the 200-day moving average, but 3 days down, high probability that today will be an up day in some form or fashion. It doesn't mean that that will happen because the market loves threes, fives, sevens, and 12s. So we could easily be on our way to a 5-day down, but threes happen for more often, and so the probability is that this will be an up day. And at least it is starting as a gap up from the close. That being said, looking at inventory, we had negative price action, negative inventory. However, the inventory was only negative 12,000. You would have expected it to be substantially more than that. And at one point during the day, it was minus 41,000. So some ugliness exhibited yesterday. We'll have to wait and see what happens today. Looking at the overnight action, 53.05 all the way down to 52.27. That is approximately 70 points, 70 points approximately. So it's not as bad as yesterday, but still a tremendous amount of volatility overnight. Where is support and resistance? Well, obviously 5,300 is a big number. 53.20 and that area right there, which is 53, I'm going to call that 41-ish. If we can get above that, there's another band up here. It's around 53.70. We'll call it 53.72-ish. On the downside, support definitely 52.10. See that little area there, and then right at 51.93. We drop through that, and we're going to be at 51.68. So there's your support and resistance numbers. Stock Trader's Almanac for today is 57.1. 57.1. Now I'm going to spend just a minute or two talking about volatility. Everybody's saying, oh, the volatility is crazy. Oh, the volatility is crazy. But the reality is volatility is a symptom, but is not the disease. The disease is lack of liquidity. Here you can see a super DOM showing that you've got single digits and low double digits on both sides. So a small order of 10 contracts blows through the bid. So it's a liquidity issue. It's not really a volatility issue. Yes, volatility comes from no liquidity. It's really the liquidity is the problem. So why do we have no liquidity? Because no one is willing to take any kind of size. Now, this is pre-market, so this is not particularly unusual. But once the market gets open at 9:30, you will see single-digit and low double-digit numbers here, and that's just screaming low liquidity. None of the market makers are willing to step in and take any kind of size, so we have no liquidity, which means that an algo that does 100 contracts can blow through 4 or 5 levels. And you have seen this over the last few days, this crazy 8, 10, 20 tick movement in a heartbeat. And that is because there is no liquidity. Therefore, we have high volatility. But it's really a lack of liquidity that is the problem, which is a lack of risk taking. The big boys just don't want to sit out here and take and absorb. As an example, just a few years ago, I can remember when the S&P would have hundreds on the bid and hundreds on the offer at any given level. But we have divulged into a low liquidity environment, and that is really, really difficult to trade. So there you have it. There you go. Volatility is not the problem. It's liquidity that's the problem. Have a great day. Happy trading. See you tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.